Hey everyone, BigBear.ai gave a big investor update, which I will share with you in this video. I'll review its latest acquisition and how it's digesting that acquisition. I'll review its latest revenue growth numbers. I'll discuss their financial metrics, including the cash flow from operations. I'll look at the balance sheet. And finally, I'll compare all of that against its valuation, and I'll update my buy recommendation for BigBear.ai stock. Coming into this investor update, I did not have the stock rated as a buy, so you're going to want to see if I'm changing that recommendation, and you'll find that out by the end of this video. So let's take a look at the numbers. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so BigBear.ai telling us that they closed the acquisition of Pangiam in an all-stock transaction, which combines the two companies. It now has a cash balance of $81.4 million as of March 31st, and that's important for BigBear.ai because it's losing money on the bottom line, so it needs that cash balance to give it time to reach profitability. And the company affirming its full year 2024 revenue guidance of a range of 195 to 215 million. I highlighted already that BigBearai stock, I had it rated as a hold, not a buy, and I updated that recommendation most recently on April 9th. So if you took that recommendation, the stock was much higher on April 9th. You would have saved yourself some money. Of course, BigBearai got caught up in the AI frenzy earlier this year. The stock price soared from less than $2 per share all the way up close to $5 per share before now trading at a valuation that is below where it started the year to begin with. So a roller coaster ride for BigBearai stock investors, to be sure. The company said revenue decreased by 21% to $33 million in the first quarter of 2024. The primary reason for the decrease was the planned wind down of the airport's ePass program. That cost the company $6.8 million, and the elimination from revenue from Virgin Orbit due to their bankruptcy announcement in April of 2023. That was another $1.5 million. They also experienced delays in contract awards to continuing resolutions. So a challenging quarter for BigBearai. Revenue falling 21% is a big drop for a company that's supposed to be a growth company, a growth stock. It's valued like a growth stock. It's losing money on the bottom line. And when revenue is going backwards and you're losing money on the bottom line, that's a bad combination. That's not likely to lead to investor gains longer term. That's why I have not had BigBearai rated as a stock. And the net loss from operations, $125 million for the first quarter of 2024, and that includes some non-cash charges of $85 million. So excluding the non-cash charge, the net loss would have been $40 million on revenue of $33.1 million. Still not good, but not as terrible as the net loss appears on first look. The company did note that it has a backlog of $296 million as of March 31st, and the consolidated results include results from Pangiam from the acquisition date of February 29th through the end of the quarter. So roughly 1 month of results from Pangiam are included in these numbers, which makes the numbers look even worse because you're adding the revenue from Pangiam for at least 1/3 of the quarter, and you're still reporting a more than 20% decrease in revenue. Now, one of the good items from the quarter is that the U.S. Army recently provided an $8.3 million extension to BigBearai. These types of contracts are big deals for companies like BigBearai. Not only does it provide the company with revenue, but it also provides the company with credibility, which it can go and then get deals with other companies after it can say, look, the U.S. Army is providing us with contracts. You should deal with us too, because if the U.S. government thinks highly of us, the U.S. Army thinks highly of us, you should consider our company. And that could be one opening door for BigBearai in the future. So let's look at the financials more closely. We already highlighted the revenue decrease from 42 million down to 33 million. The gross profit fell from 10.2 million down to 6.986 million, a significant drawdown to be sure for gross margin. And then, of course, that leads to massive losses on the bottom line, which we already talked about. And the company is diluting shareholders significantly. Last year, in this same time, they had 138 million shares outstanding. They now have 187 million shares outstanding. And the reason this is bad news for investors is because if or when the company eventually achieves profitability, those profits will be split with more shares. And so the earnings per share will be lower because there's now more shares outstanding. And I suspect that BigBearai will continue diluting shareholders so long as it's losing money on the bottom line. That money has to come from somewhere, and unfortunately, it's coming from investors. So most of the money the company got in this last year was the result of stock sales and not long-term debt. You can see long-term debt remained flat, 194 million same time last year, 194 million right now. The balance sheet is not in great shape. It has 194 million in long-term debt and $81 million in cash. So more than 2 times long-term debt to cash, which is especially troubling for a company that's losing money on the bottom line. If you were profitable, then that is not such a big deal because you're generating so much cash, you can easily pay down that debt. But when you're losing money on the bottom line and you have long-term debt, where is that money going to come from to pay off your long-term debt? It's either going to come from more investors, right? You refinance that debt, or you sell more shares and dilute investors even more, or you hope that by the time this debt comes due, your company's achieving profitability on the bottom line. But BigBearai is going backwards on that prospect, not forwards. It's not reducing the losses, it's losing more money on the bottom line. And it's the same story with its cash flow from operations. In 2024, in the 3 months that ended March 31st, the company used 14.3 million in operations, and that was up or lower, more losses than the 12 million it generated in the same quarter last year. So again, going backwards, losing more money in cash from operations than it did last year. Not a good sign, not the direction you want to go. So now the stock is trading at a forward price to sales of 1.6, back around where it started the year at after that frenzy up and down with BigBearai. So to update my recommendation for BigBearai, I had it rated as a hold and market perform. I'm keeping it there, although my inclination is to move it downward. It moved a step lower, in my opinion. It didn't improve. It went backwards. So it's moving closer to a sell than being closer to a buy after these quarterly results. So today is May 7th, and I'm keeping it rated as a hold. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.